everyone, welcome to the free daily pre-market report for Monday the 11th of January 2010. Just thought I'd give you the full introduction to today's newsletter. I hope the weather's clearing up wherever you are around the world. The heavy snow that was forecast in the UK hasn't come yet where we are, so hopefully going to get out today, do normal things, go to the bank and do some yoga. Yes, thank you, no sniggering. I have started doing yoga in 2010. Well, let me just rephrase that. I've done it once before the snow came last Monday, and it was interesting. It felt good, but it was interesting. Certainly the rest of the class enjoyed it. Let's start off by taking a look at the Euro-US dollar Forex cross on a 60-minute chart. You heard me speak last week in the members video about this support level around about 143. So strong support now at 143, 142.50-ish. I know we did spike through here and we pulled our sell stop order because of the employment situation report coming out, and that now looks like a very good decision. In fact, so what we're really looking here for is to take out these levels here, and you can see the low that was made was 142.62. So I think now a break below 142.50 can see a technical sell-off in the Euro-US dollar. I think the Euro-US dollar's best days are behind it. For the euro, we broke through on a daily chart every trend line imaginable. We have seen, of course, a sell-off of the dollar due to the disappointing employment situation report, and the selling has built up in Asia and increased early in the morning in Europe, and will it increase again when the US session opens? Remember today, holiday in Japan, coming of age day. The markets there are going to be closed. So the markets now seem convinced that after poor non-farm payrolls data and reviewing the minutes from the previous FOMC meeting, which we got last week, that the Fed's easy monetary policies are going to be put on hold for now and possibly for quite a while. So this morning, the weak dollar is obviously assisting commodity prices to rise and is assisting equity prices around the world to rise. However, we are looking here on a 60-minute chart. Okay, we've had a good spike higher, good sell-off in the dollar. We feel that the euro is going down against the dollar. We are still short here. We're holding on to it. If we go to a daily chart, you'll see all we've done so far is rally above the 8, rally above the 21, still below the 50. If you get the retracement to the 50, I would use this as a place to short, which is about 145.914 at the moment. That's a 50-day exponential moving average. So yeah, we're seeing a bit of a retrace in the dollar, but I think that's all it is for now. Retrace in the Euro-US dollar, and I think that's all it is for now. A retrace, still bearish, the euro. Obviously, with a weak dollar, we are seeing. I don't believe that. We took the contrarian play. I don't believe the decoupling of the euro and the stock market has finished. I think it has decoupled, but then today obviously we're seeing some correlation between the two of them. We're looking overbought now on the S&Ps and many stock markets. Couple of points to bear in mind. Are you going to buy at these levels? I wouldn't advise that. You've got some form of resistance and support just near the 8 EMA at 11.27ish. So I'll pull back to there. I know it's 20 points, but there's a level after that. We've got the trend line and the 8-day exponential moving average around about 11.20, 11.21. So just be cautious if you're initiating any new longs in the stock market, and wait for that pullback. I'm looking a little bit overbought. I think that just about covers everything. We'll now move on to the more in-depth members pre-market report. And if you're not a member and you want to view the rest of the in-depth members video, all you need to do is go to the Genius Trader homepage and then just take advantage of the 1-month complimentary membership to the live trading room and the Genius Trader members area. Okay, that wraps everything up for this morning. Everyone, just be cautious then. There's a bit of volatility this morning, which is great. After last week was just, Snoresville. We could have just really sort of just had the week off, I think. Although it did allow us to get short US dollar, Canadian dollar, which was useful. But now we're starting to see a bit of volatility pick up. Let's hope it continues. Look forward to speaking with you tomorrow. Till then, happy trading.